All right, welcome everybody to week one of the option selling boot camp presented by the Theta Daddies. We're happy to have everybody along for the ride with us. On the webcam or on the stream, you can't see me, but I am on webcam for the YouTube video briefly. And just wanted to say hello, welcome. My name is Rise. I'm one of the founders of the Theta Daddies. We've got Average Advisor with us today in the Discord chat. For those on YouTube, obviously you can't see the Discord chat. Certainly, if you want to jump in for other portions of the boot camp or future boot camps, then you can see the Discord if you join us there. And we'd love to have you. That's where I think a lot of the value is, asking questions and really getting the most out of this course. So I'm going to already hop off of the webcam because it's distracting, I think, to both me and everybody watching. For those of you who are in the Discord, please feel free to ask questions, and we're happy to answer anything as they go. Average Advisor may answer some questions in chat for me, which I appreciate ahead of time. And hopefully we have a real good class here today. Again, this boot camp, the whole point of this is to teach everybody as quickly as possible how to sell options effectively. And that is what the Theta Daddies do. That's where the name comes from. Theta being the decay of time. And Daddies, well, the three founders, myself, Average Advisor, and Bodog, were all dads, and it sounded better than Theta Mafia, which is probably taken anyway and just not really representative of a bunch of older guys. Not super old, but like we're not 20. So anyway, off topic there a little bit. Let's get into the topic at hand, which is week one, fundamental analysis and technical analysis. Here, we're going to be jumping into the basis of being successful in selling options. And I'm going to actually start with something a little bit different, which is maybe if you're from After Hour, you've seen this before. I've posted this on occasion. Same is true on Reddit and some other places. Probably I've got a YouTube video on it. But I have 5 golden rules that I've come up with. And I'm sure I'm not the only one to come to these conclusions, but they really seem to hold true month after month, week after week, year after year in option selling. And I think it's a good place to start because they really do, they're the preamble to fundamental analysis, right? So we'll jump right in here to rule number 1. And this is probably the most important rule for many reasons, but make sure you're selling options on stocks you're happy to own. And we're going to get into this a little bit in the fundamental analysis side, but what you'll find out is you will be tested on this, on how true this is, as you sell options and your underlying goes up or down with the stock market. It's going to happen. Unfortunately, it happens to all stocks, right? And nothing goes up exclusively. And when it goes down, how are you going to feel? Are you going to be okay, quote unquote, holding the bag? Which, is it really holding the bag if it's a company you believe in long term? And I think a lot of members in the Discord this past couple of months, especially with this recent drop, as this is being recorded in early December of 2025, in November, we saw a big correction, not a big correction, but a correction of a lot of equities, especially growth stocks. So if you check SPY, you're not going to see a huge drop. You'll see some, but on a lot of AI tech stocks, there's been a big correction from all-time highs, and it hurts if that's where you're heavily concentrated in. However, it hurts less if you're like, whatever, this is fine. This is a stock I believe in long term, and you can continue to look forward and sell options on those. Now, you may find yourself under cost basis at times, depending on when you got in or out of a stock. And, that has some finesse related to how you manage those positions. But number 1, make sure that you like the stocks that you're selling options on. Then we'll talk about how you pick that here in just a bit. Rule number 2 is to not panic, especially during after hours trading, because things can look pretty wild there at times. There's some weird things that happen with low liquidity in after hours, big spikes up or down, and it can cause fear, panic, and make you maybe want to sell at a loss, which we generally recommend you don't unless there's a really good reason and basically your hypothesis has changed to some degree. Next up, we've got rule number 3. Stocks don't only go up or only go down. Have patience. This will make a lot more sense in the context of selling options as you get into the process. So later weeks, we have examples live right now where if I were to bring up TradingView, we had a member actually that was looking at ALAB, we'll bring up as a quick example. And they were really worried about their 180 or 170 covered call getting called away, which if you're super new may not mean anything to you right now, but their cost basis was well above it. And within the same day, we saw this happen. And the stock basically crashed, which isn't good, but it also eliminated the need to do anything with a position. And having patience basically stopped it being an issue from an option selling standpoint in trying to get out while you can and not have to recognize a loss below your cost basis. Rule number 4 is don't overextend. There's a max trade size we recommend of 10% of your portfolio, and usually less than that. This is the max, not what you should do every time. And a max position size of 20%. And there's a whole chart on that around conviction, which if you want, you can pause the video, but we're not going to get too much into this. We will get into this later when we get into option selling proper. Rule number 5, we like to say always take profit. This is especially true on the cash secured put side, but again, not super relevant on day 1 of the options bootcamp. So back to the immediate agenda here, we're going to be talking about today fundamental analysis and technical analysis. And in this, we're going to really start diving into what makes a good company. So if you remember rule number 1, the golden rule number 1, does anyone remember? You can throw it in the Discord chat if you remember what rule number 1 is. I've already moved away, and we can see if anyone was paying attention here. I'm not... It shouldn't be that hard because it was the first rule. But rule number 1 is, yes, Lee got it. Very nice. Sell options you like on stocks that you're happy to own. Husker, Manta, everybody's got it. Perfect. I saw you writing. I'm sure you had it too. I'm going to give you credit just because I saw you typing. But in general, fundamental analysis starts with picking companies that you, in general, like. And for me, I've got some examples of companies that I like, and it's going to kind of run the gambit of good companies and maybe not so good companies to sell options on. So by picking companies that you like, typically that means you know about them, you're aligned with them, you like what they do for one reason or another, and that will be something that if you believe in them long term, you'll profit off of them, assuming they're not junk. And we're going to go into how to know whether or not they are junk or not. So we have some examples in the document, and this was written, actually I think Average Advisor is the one who wrote this up proper originally. And we are going to go through what you see in this document, and this document will be shared with everybody who's watching the video. But me personally, I'm going to give you some examples of, I really like Reddit. Any of you who know me already know that I like Reddit, so you know I can't not talk about Reddit. Originally, when I started option selling years ago, I also liked Lucid. And finally, I'm a big fan of Lilly. And so Eli Lilly, the pharmaceutical manufacturing company. For those of you on the call curious, let me know what are stocks that you like, and maybe we can integrate that into the conversation here. So just feel free to throw them into chat, and we will try to take a look at as many of these as we can while keeping this less than 6 hours long for this particular portion of the training. So for me, when I looked at this, I was like, you know what? I really like Reddit as an example because it had just IPO'd, and I was a big fan of it. I've used it for well over a decade. I've seen others like Dig come and go, and Reddit has stayed very true to their purpose, their mission statement. And the fact is, you could tell they were starting to make money. You're starting to see ads out on it, and to me, I saw a huge growth opportunity. But just because I liked them doesn't mean that they were really any good of a company. And so we need to start doing things called fundamental analysis. And fundamental analysis is just looking at the basics of a company. And this includes things like the balance sheet, how, the earnings, the reports, things like that. And you can go as light or as in-depth as you want. So, Brick, I see you like CLS, Hood, HIMS, Mu. That's how you say MU, right? You got to say Mu. Palantir and SoFi. Oh, good. Palantir is what I want to look at, actually, for our example. Those are all probably pretty good companies to look at. For what we're going to do, we're going to actually use a little bit of Yahoo Finance, and also I'm going to show a little bit on TradingView, which if you don't have TradingView, number one, it's free to have a very limited version of it. And we don't partner with anybody, but we do have an affiliate code. If you don't already have TradingView, you can hit the code that'll be in the YouTube video below and sign up for them. Highly recommend you check them out at the very least. They are a fantastic program. But we are going to start first with Yahoo. And we've got a simple example that everyone knows. The number one company in the world right now. You know them, you love them, NVIDIA. I think this is like a boxing announcement for a company equivalent. But NVIDIA, obviously huge in the world today. And there's some really cool things about Yahoo Finance. And this just shows how little you need to pay for in order to start doing any analysis, both fundamental and technical included. So here we are on Yahoo Finance. You may need to make an account, whatever. Again, that's free. I don't even have premium, you can see up here on the top right. But let me actually modify my screen here a little bit, and we can show the whole screen. I think this will make it a little bit cleaner so you can see everything that I'm looking at. But on this screen, we can start off, and obviously it's got the stock ticker going in line format. And up at the top, we have this cool thing called Analyze with AI. And you can get a real brief initial analysis outlook from AI. And it's a good starting point to see if what overall the community, the world, the market thinks about the company that you're looking at and whether or not you agree with it. This is updated regularly. So I looked at this an hour ago and it's probably already a bit different from what I saw earlier, but there are key things like market sentiment, what the analysts think about it. You can see there are price targets that go from 220 to 320, and what are we at right now? 180. So analysts are generally bullish on it. That doesn't mean anything. Analysts typically are lagging on a stock, although they love to, as a stock starts to move up, you'll see them throw out a price target that's above where we're at, like, oh yeah, look, I'm right, I was going to be right this whole time, and hopefully you follow them and all that. But we don't care too much about that. That's just a single data point that we want to consider as we come up with our perspective and outlook, and all these things together will build conviction or not as you read into it. You can see it goes into things like economic indicators, AI demand fluctuations. There's a lot of stuff going on today, right now. Microsoft, something about their decreasing their AI chip quota. I don't even know the details, but that is something that's affecting a lot of stocks today. So you can see the immediate here, which is all very useful. So good place to start. And then if you just scroll down a little bit, you start to see a bunch of stats that we can look a little bit deeper into. And some of the important stats that we want to look at are things like, obviously, the price is important, but also we're interested in, on this chart, PE ratio. This is a big one that a lot of people look to as an immediate, hey, what is a good PE ratio? And if we go back to our material here, we can jump in and see that there are some parameters that you might want to consider. There's low PE, very low PE is well, let's go back before we get into that. What is PE? PE ratio, sorry for jumping ahead and getting excited, is the price per earnings ratio. And all that is a simple equation of dividing earnings into the price. And so at the time that this was written, this is kind of interesting, the PE ratio for NVIDIA was 47.57. Now, if you look at it today, when we were just on the chart, it's 44. So obviously, this changes over time, and you're going to be interested in seeing those changes over time because that can tell you, are people bullish or bearish on it? Obviously, if it's going up, that means the price is going up, and the earnings hasn't changed necessarily since the last earnings report. So you can see there's some momentum perhaps behind it. And overall, we're interested in companies that have a good PE, nothing too low and nothing too high. We're looking for just right. Now, there's some general guidelines here. Again, very low PE would be something under 10. There's concerns about the business. Maybe the market is shrinking. Maybe like, oh, who's the company that Muffin Man loves to talk about all the time, whose brother is the CFO and they never get their books right? Well, that, there could be some risks around that particular stock when it comes to PE because people are worried about it. We've got extremely high PE, things over between 40 and 50, which is where NVIDIA is. But that is indicating high growth expectations in the future, right? So we're talking about where we see things going in the future, and that's how investors quantify the value of the company based off of the stock price compared to what they're actually producing in terms of earnings. Now, if a company is negative PE, well, that means the company's losing money. And sometimes that's cool, but sometimes it's not. If it's a new developing company, you might say, yeah, they got plans, they've got all this stuff. I would guess most quantum companies, as an example, have negative PE. And then you've got sky high PE, which, as Husker, I think you brought up Palantir. We'll take a quick look at Palantir. What do you think their PE is? Any guesses before I scroll down and spoil it? There's some things that may not make sense when you look at them, but in those cases, we have some tricks that we can consider. 100's the guess. Well, here we go. Is it 100? No, it is 400, which is absurd price to earnings ratio, right? So this is trading at an extreme level of future expectations. And if you look at like the 1-year chart, you can just see this wild increase from 60 to, man, we peaked over 200 here at one point. 142% increase over time. If we look at the 5-year, it gets even wilder, going from 579 to where we are today just a couple years ago. So crazy growth story, but there's a lot of believers in this stock. Now, when you see a PE ratio like this, how do you go like, oh, well, now's the time where I want to invest? And there are a few ways to do that. Average Advisor has picked one of the two that I know of anyway, or that I use, which is the price to sales, which can give you a feel for what the sales look like versus the earnings. Because there can be a lot of investing going on, and that doesn't tell the whole story because that can drag down earnings, right? If you're spending a lot on investing in yourselves, but you're making a lot of money because of sales, well, that's very useful information to know. So thanks for calling that out, Average Advisor. The price to sales ratio, as he has already found for me so I don't have to dig around and find it, is only 100 times versus the 400. So that's good to know, right? That helps maybe ground you a little bit. But there's another way to do that, and the other way to do that is to look at the competition. What is the competition's PE ratios? So, for NVIDIA, going back to NVIDIA here, you might say, okay, NVIDIA is trading at 44. Who's the competitor to NVIDIA? Well, you can go a lot of routes with this. I'm just going to go simple and say AMD is a competitor. You can argue whether or not they really are or not, but for the purpose of what we're doing here, you can say like, oh, wow, look at AMD. AMD is trading at 112. Well, that's more than twice what NVIDIA is trading at, right? But obviously, way different market cap. They don't have exactly the same breadth of business that NVIDIA has. But you can do this depending on what stocks you're looking at. Maybe a better example would be something like Archer, which is electronic vertical takeoff and lift company that doesn't even have a PE ratio. Never mind. Clicked on the wrong one. But you can compare something like Archer to Joby, Joby being a competitor in the same space. I probably should have looked at this one ahead of time before picking random companies. But you get the idea, right? If you can look at a company as compared to competitors and its peers, you can say like, okay, well, what is normal in this industry for a PE ratio? And that can help you feel more or less comfortable about that. So that's a lot about PE. Yeah, Archer's a little bit of a sad story right now. Actually, Archer's, I believe, mentioned in the second part of today where we get into technical analysis, and you might laugh at what's written here versus what the charts show today. But we'll get to that here in just a bit. Next up, though, so that's a bit about PE/PS. Next up, we like to look at income, balance sheets, and cash flow statements. Now, I like to look at this on TradingView. I will show it to you, though, we will go back to NVIDIA here, which is a couple of clicks back, I think. We will show it on Yahoo Finance because it's very easy to get to. And all you do is you click on right here, financials. Real simple, right? Nothing crazy. And you can see the table broken out. You can switch from annual to quarterly depending on what your interest is and what you're looking at. And based on that, you can look at things like total revenue, cost of revenue, gross profit. There's a million things that companies report on. And all of this could be important, and it's going to be different depending on the company to some degree. I mean, there's always going to be things that are important. But I have a handy little chart on the end of this that, again, I will share with everybody so you can see that, of what I like to look at. And thank you, ChatGPT, for helping summarize this for me into a nice looking table. But basically, you can look at a few different categories here for healthy signs and things that may make you feel more comfortable about it. So obviously things like profitability are super important. Our net margins, gross margins, operating profit, EBITDA, EBIT, depending on how the company looks at it. Those are just different types of profit and how it's measured. EBIT standing for everything before interest and taxes, EBITDA standing for everything before interest, taxes, depreciation, and amortization. So depending on how a company runs, they value those metrics slightly differently. A company that is very heavy into capital expenditures is more likely to use EBITDA versus EBIT, but it doesn't matter too much. Just you're going to find the ones that people talk about for a particular company or a particular sector, and then just looking at whatever that one is it going up or down? Is it getting better? Is it getting worse? Right? That's what we care about here on the fundamentals. Are things improving or not? And if they're going down, is there good reason for it going down? So another thing that we are interested in can be things like free cash flow. And as long as that's positive and growing, hey, that's a great sign. Free cash flow just means the amount of cash that a company has to do what they want with. And that can be literally anything. So if that number is getting larger, that means they can choose to invest in themselves. They can choose to purchase another company, perhaps, right? There's a lot of things that you can do with cash, the ultimate most flexible position within a business. So these are the types of things that you're looking for. Now I'm going to show this on TradingView as well. And I'm going to show that for my examples. Let's go to Reddit, which is apparently slightly green today. Cool. Okay. We can ignore all my drawings for now. Let me hide all that. We don't need to look at all that mess right now. But down here on TradingView, you can see on the bottom right, we have a whole bunch of things. We've got the key stats similar to Yahoo, where it's got EPS, it's got market cap, it's got, everything you might want to know at a glance. And then we have this thing for earnings, income statements, etc. I'm going to look on earnings real quick where you can click on more info. And same deal here. You can switch from annual to quarterly. And in the case of Reddit, well, they've only been IPO'd for about a year and a half. So there's not a whole lot to see on annual. You can see just a little slice of it. And then on the quarterly, we can look at, hey, how are we doing based on what we estimated and actual performance. And hold on one second. It looks like I gotta mute somebody here. Not sure who that is. If you're not on mute, if you wouldn't mind muting yourself, that would be fantastic. I muted somebody for myself. And okay, back to what we were doing. So the things that I look at here are increasing on the earnings, but also on revenue, right? So we can see this is a quarterly basis for Reddit that we went from 392 to 500 million to 585 million. Well, guess what? That means the line is going up and to the right. And if we continue that trend, man, that feels pretty good. So to me, I look at Reddit, I'm like, yeah, I love holding this stock. Then there are other examples where I'm going to show you one that I've gotten out of, Lucid, where it's a pretty sad looking chart. Well, if you zoom out, it doesn't get better. In fact, it just gets more and more sad the further out you zoom. Ugh, gross. Forever alone stock here, just continuing to fall into the ground. But we're not too interested right this moment on the chart. We'll get to that in a bit. We're more interested on the financials, again, where we can look at Lucid. How are they doing? Now, they are showing that they have slightly increasing revenue, which is a good sign. But the problem is they can never meet their expectations. And the same is true on their earnings. You see the gray bar is getting smaller faster on a negative, right? Which is okay to be negative if there's a path to becoming profitable and a vision for that to happen. And sales are increasing, but just not at the rate that they really want them to. And my personal conclusion on Lucid is, while the car might be cool, the technology might be cool, I just don't believe them as a business that they can execute on their plans for growth. And maybe they will one day, but the fact is, right now, I don't see it. And I got out of this company because it became a bag that I was like, you know what? It's a bag and it could go to zero. It's very possible for companies to literally go to zero. We hope that they don't, and often they figure out a way, right? That's why these CEOs are paid what they're paid, is to figure out a way. But it is just not the company for me. And so I got out of it. And then I'll show one other example of Lilly, who, again, has really nice increasing trends. And this is on the quarterly. We'll look at annual in a second. And I haven't even looked at annual, so we'll see if I'm surprised as we go through this. But very good growth, and again, continually beating expectations. And I believe greatly in their leadership because they have a history of beating expectations and executing on what they say they're going to do. So if we look at the annual, we can see it's fairly similar. They are continuing to show, this also has to be changed, growth in revenue. And generally, if I were to trend line 3 data points anyway, I guess I can go back further, it is most definitely increasing, right? So that is a great sign. And it's a well-known company that's been around for a while. So you can see this as well when you look at their stock chart, right? And if you want to look on a longer time frame, you can see some neat things when looking at this. One, you can see the overall trend, which should line up with general performance. And you can see how often are they beating versus missing expectations. And you can actually click on the E's to see, they beat here, and they missed here. And there's usually, there's always reasons for this. Now, if I go back to Lucid, there's a lot of reds, and this is concerning to me. And this is just in the recent past, right? And they had a reverse split, which is always kind of a scary thing. Maybe a kiss of death, as I've called it in the past, when a stock is in the $2 range and they do a weird, like 8-to-1. Oh, this was a 10-to-1. Okay. But they do a weird split in particular, scares me because it seems like they're trying to get people to buy more shares so they can sell options on an even basis. And overall, nothing here looks or feels good to me anymore. And the trend is bad. Now we'll get to the trend here in just a bit, but that's what I'm often looking at from a fundamental standpoint. And you can dig further in here on the financials. You can look at the statements and you can click into these things to say, like, what are the current assets? What are the liabilities? And you can really dig pretty far into some of these things. Look how far you can go. I'm not going to go into this table. This is for you to decide how far you want to go into a company that you're looking at. but I do want to show how much information is available. And because these are public companies, basically all the information is available. And this is what you really want to be digging into. Now, the good thing is, but wait, there's more. There's not just stuff that you have that you want to look at from a number standpoint. You heard me talking about leadership of the company as it related to Lucid. I believe strongly in the leadership of Lilly. I believe strongly in the leadership of Reddit. And the reason for that is you can do other things. You can listen in to these companies' earnings reports, their actual calls. You can call in and listen and hear what they have to say. So you can get summaries from these tools in Yahoo Finance, in TradingView, but you can literally just listen to the call, and they're scheduled, so you know when they're coming. So when that happens, or when those calls are happening and you're interested in it, especially if you haven't gotten in yet, you want to get in, go ahead and listen in. Go listen in to hear what the CEO is saying, the CFO, the COO, not only what they're saying, but listen a little bit to how they're saying it. Now, we don't always know if a CEO is going to be able to talk confidently and all that. So that's kind of a question that you'll have to decide on for yourself. But it can give you an insight into how they think about their company and how they're running it. And based on their vision, does that line up with how you feel about the stock, which ultimately can give you that conviction needed to start selling your first options on them. Okay, other things that I would do on top of that is I would also recommend you just do a quick Google search and look at a company and say like, hey, what's going on from just a community standpoint. One of the things that I like to do is I like to go to Reddit and actually look for Reddit's. Reddit has a bunch of different subreddits that you can check out for almost any company. You can do that. You can do that in TradingView as well. You can actually look. You can see there's a community tab here, which is kind of interesting. And if you want, you can see. You can look at what are the conversations going on for a particular company. Now, there's other things, though. There's things like on Reddit, there are subreddits for companies, and you can look at like Reddit stock is the Reddit subreddit. We're kind of going a little inception-y here. Sorry. This exists for others like Clove and things like that. But overall, you can get a feel for what the community is thinking and other perspectives. Now, obviously, when you're looking at this type of stuff, I recommend thinking about it, reading it with a grain of salt. There's some funny things that happen in these where people can be really short-sighted and not thinking about the long term here. But it's just another place to get some perspective and see if maybe you're missing something. Maybe there is something to it that you haven't thought through, and it sparks an idea of like, oh, I want to dig into this some more. Like Reddit, as an example, a lot of people are talking about the DAUs, the daily active users. But really, they're only looking at the US standpoint. Well, the subreddit had brought up things like, yeah, but look at the global expansion, right? So really bringing in considerations outside of what the analyst narrative might show if you just listen to analysts. I don't want to go too deep into that. I'm just trying to give you examples of things that you can look into and consider. So, Average Advisor, I see that you were talking as well about listening to the webcast online is huge, like we were talking about here. But yes, they also share their presentation decks. You can download their PowerPoint presentations or PDFs and dig in from there as well if you'd like. So I'm going to take a moment to take a sip of water, catch my breath, and see if there are any questions. Be happy to answer any questions that you might have on what we've talked about so far. This is officially the basics of the fundamentals of fundamental analysis and covers most of the things that I like to look at a glance. So I'll give you a sec for any questions that you might have. While we wait for that, hello YouTube. Hopefully you're enjoying the video as well. Next up, we are going to talk about technical analysis. Okay. Well, no major questions on fundamental analysis. That must mean that I went through it perfectly. Thank you. I appreciate that unspoken feedback. And with that, we will get into the technical analysis stuff, which is not as boring as it sounds, in my opinion, anyway. But really, the interesting thing about technical analysis, once we found a company that we're interested in, whether it's Reddit, NVIDIA, Palantir, SoFi, I saw SoFi brought up, MU, whatever company, hopefully not Lucid, because it's terrible. We want to look at it from a momentum standpoint and a market view standpoint. So I like to think of technical analysis as, number one, it's important to know that TA is not 100% predictive. In fact, I don't think it's 70% predictive. If it is 55% predictive, it is statistically helpful, right? And so you should consider it. I used to be a big non-believer of TA. And honestly, it wasn't until I joined the Theta Daddies and watched and listened to guys like Average Advisor and Bodog watching their charting, where I got much more into it myself and started to go like, oh, wow. Yeah, it is amazing how a bar, a line can touch an exact point in time somewhat predictably. Somehow it looks predictable to the penny in some cases. And you realize like, oh, okay, there are things happening out here that we can start to understand. And when you really consider that a stock chart is representing all of our active markets participants' collective view of whatever that stock, ETF, etc. is, and we know that humans act predictably, we can use this to our benefit, right? It becomes just one more data point in our decision making, most notably for entering or exiting a position, right? And that's what we're looking for. Is we use TA to essentially give us the best opportunity at max profit that we can reasonably try to get. It is very fascinating when you start watching charts over time that the market, as you see here, quote unquote, likes to do things. And that includes things like gap fills, testing resistance lines, testing support lines, and that's what we're going to cover here. I agree with Average Advisor. There are things that are extremely patterned day in, day out. And the crazy thing is, as we get into this, one really important thing to note, and I'm going to do this in TradingView because I have everything set up nicely in TradingView. One important thing to note is all indicators that we look at work on any timeline that you want to look at. And that sounds crazy, okay? I know that sounds like, at a glance, that can sound crazy. Let me go to a stock that isn't Lucid. Go back to Reddit for now. You can see that there's a 3-minute chart. Which, sometimes you've got to adjust it a little bit. And it's going to be moving around like crazy on the 3-minute chart. But there are patterns and things that work on the 3-minute chart that also work on the daily chart, that also work on the weekly chart. And even for some long-lasting things, you can look at a monthly chart, which is going to be like 10 bars for Reddit, so it's not really worth looking at, but you get the idea. So you can look at various time perspectives depending on what you are trying to find out. So on the daily, this is where I usually like to start when looking at any chart. I like to start zoomed out and zoom in. So I may start on the weekly or the daily. They're both, they tell you slightly different things, of course. But the daily feels most relevant to what's happening right now, what's happening in recent memory. So I'll start there. I'll then zoom out to the weekly, and sometimes I'll zoom back in and go even closer than daily, trying to find an exact entry or exit. But generally, sticking to just the weekly and the daily is honestly enough for option selling. It will tell you enough for you to make decent decisions. Now, we're going to start with the lines that you see on the screen here. And these are these lines that I'm talking about are the colored lines. Hopefully you're not colorblind. I don't have it set up now that I'm thinking about it for people who might be colorblind, but we will talk through them. These are laid out in the colors of the rainbow, which, if you're not familiar, is red, orange, yellow, green, purple, and blue. And we do that because if we're bullish about a chart, we like to see the rainbow. And I'll show that to you actually with Lily, because I know that's stacked pretty nicely, of a nice rainbow stack, although I'm realizing it somehow has changed over here in the very recent past. And basically we're looking for ideally a nice stacking where the red line is above the orange, above the yellow, above the green, above the blue, and then the purple. Oh, we are stacked perfectly here. Okay, I think I said it backwards. It goes blues and purple. So with this, we're looking at EMAs and SMAs. And there's a slight difference between the two. Let me go back to where we were here. And an SMA is a simple moving average, which all that means is it gives equal weight to all the data points over that period of time. And that period of time being, if you have a 50 SMA, 100 SMA, or a 200 SMA, that means that is based on the number of bars that you're looking at. Not days, not weeks, not minutes, depending on the chart you're looking at. So the 50 SMA on the daily chart is looking at 50 daily bars. But that same indicator, we talked about this already, that same indicator on the weekly is 50 weekly bars. And that's how it's coming up with that average. But again, we'll stick to the daily to try to keep things as simple as possible. Now for the 100, it's the same, where it's 100 bars of the daily for the 100 SMA on the daily chart, and the 200 is 200, obviously. Then exponential, which are my top bars here, we have an 8 EMA, a 21 EMA, and a 34 EMA. Those you'll see they move much closer to the stock movement, both because they're a shorter period, but also they have an exponential look at the data that we have included in those calculations. So they tend to move a little bit more sharply, and they look more bumpy than, say, these really smooth SMAs that take a long time to move. Now you can look at an SMA on a different period of time. I'm not going to show you how to set that up in this video or in this bootcamp trading. However, I do have a pre-made video that we'll link to in the description for the YouTube viewers, and we'll share here lately a little bit later as well. Quick question, HF74, yes, we will be sharing the document we're showing after. We will most definitely share that here in the both the YouTube video and in the Discord. In the Discord, you'll find it in the chat room that we've got set up, the channel, which is class discussion and class announcements. So we'll share that here in a little bit. But sorry, back to what we were talking about here. If you're looking for a video on or how to set up the indicators, check out the video in that link below. That links to setting up these indicators. They're very easy to set up. I will say once again, in TradingView, depending on if you have the free version or a paid version, this is going to work slightly differently for you. In the free version, I believe you can only have 2 indicators. And if you're wondering, volume counts as an indicator. So that what shows you how much trading is going on every day down there is going to limit you. But there are indicators that combine a lot of these that you can use, which is a way to get around things a little bit. I don't know if that's kosher to talk about or not, but they exist. You can find them for when you go to indicators. I'll just show you real quick. You can type like EMA, and you'll find, here they've got the 20, 50, 100, 200, and you can add all of those in a single indicator. If not, you're going to want a slightly higher version of TradingView to make your life a little bit easier when it comes to that. And again, I highly recommend it if you're using this tool regularly. Um, all right, so let me head back to what we were talking about here. We've gone through the SMAs and the EMAs, and I like to use these to find momentum of a stock. So now this gets into a book that we recommend regularly in the Theta Daddy Discord, which is The Tao of Trading by Simon Rhee. If you haven't read it, it is it's a slightly different approach than what we use as Theta Daddies. However, it is really good at explaining some of these indicators in a way that is quick to visualize and absorb. So one of the things that we look for in the EMAs and the SMAs is stacking nicely like this. And what happens is it's very common for a stock that has momentum to want to continue moving in the direction that it's going. It's usually not going to turn on a dime unless there is a huge catalyst of news. And you can see that in a lot of different stock charts and patterns out there, right? You see like Google as an example on the daily. Look at this beautiful stacking right here of all the different EMAs and SMAs that are just slowly going up. Now, if we look at that other example I showed earlier with Lucid, you have the reverse. You have an upside down rainbow, which is terrible, right? Like this is a very bearish trend. Now, it doesn't mean that it can't switch around. It just means that it's going to take time to get sentiment to shift and for things to start heading back up. And so like this could be a point where you're interested in getting into a stock, but you risk catching a falling knife. And I can show you a quick example on that, which is something that I recently slightly burned myself on, but has kind of worked out. GT, Goodyear Tire. This is a company that has historically been very cyclical and as of recently was very bearish. And I personally bought leaps in this area over here, which I thought like, oh, look, the momentum is changing, right? Things are going to get better. There's some indicators down here that indicated we were oversold, which again seemed to indicate we should move back up. And instead, I ended up catching a falling knife. And the stock continued to plummet from 770 all the way down to 650, right? So that was, unfortunately, when you're holding leaps, that can be very painful because it is a leveraged holding. However, shortly after that, we have recovered, and you can see that the stock has started to move up, and it has very strong momentum. Now, I want to be clear, this is not financial advice. I'm not suggesting anyone buy or invest in Goodyear Tire. Again, make sure you're doing your due diligence and your fundamental analysis on these companies to see if it's a company that you like to be in or not. That said, as I was looking at the trend had started to get much stronger here. And in fact, I have some drawings on it where I show a trend line of where I think this company may go. And I have a leap target way up here that I'm hoping to get to. And so far, things are holding really nicely to this trend line, which seems magical, right? Seems magical. Now, this is a real simple form of TA. I connected 2 points way back down here and made a line. And looking at that line, you can see if a company, quote unquote, likes to hang around that line and continue to follow it up. I can show you a couple of other companies who have done similar things. Lilly is another example that, well, let's delete that, that has done other things, that has also done things like following a really simple line. This line here was drawn way back here. In fact, it was drawn from August to September where we had a major overblown catalyst. This is a place where a lot of Theta Daddies decided to invest, and I personally thought it was a very good point to jump in. And we connected the dots, and these dots have created this line that to this day has held up months later. Now, most of us are long since gotten out in this range over here, but isn't it wild to see that a simple line connecting a couple of points is almost like a magnet for this stock to snap back to, both above and below it? We seem to want to follow this trend line. Now, at some point, it will break down. We don't know how long this trend's going to go for, but it can give you some indications of whether or not you like an entry or an exit, right? And that's what we're using all this stuff for. One final example, I was looking at ONS, and ONS has a funny trend line going on as well. This may not be perfectly drawn. I drew it and I just connected this dot with one of the dots over here, and the dot, quote unquote dot, being the bottom of these candles. And drawing a line, somehow we once again continue to be following it, even though the bars are wild and volatile, because that's what ONS does. We still seem to be following this line, which is, to me, fascinating. Again, could break down tomorrow. I don't know. But we see some nice things happening here is we're starting to restack. If I hide this, we're starting to restack the EMAs and the SMAs in a bullish way where we can get back to having the rainbow. And that'll happen here once the red, orange, and yellow go above this green line. We would be back to a very bullish stack on these SMAs and EMAs. All right, I'm going to take another breath here because we're going somewhat quick through the indicators, and I just want to pause for any questions that we might have in the Discord chat. If anyone is trying to talk and you're wondering why I don't hear you, let me know, because I got a bunch of people server muted because it was making noise earlier. If not, all good. We will get into the next topic, which is support and resistance. Now, this comes in two forms, both Fibonacci's, but also real simple trend lines. And we already talked about GT. We can go back to GT real quickly here. And you might wonder how I picked these lines to begin with. And in these lines, we have history. What type of history? Well, if you zoom out far enough, look at this. In the past 5 years, and I didn't go back any further because we get into like COVID stuff, black swan events that don't necessarily have relevance. We have touched the same exact point. Almost, I'm not sure it was to the penny, but it's not far off. And that's kind of fascinating, right? This is where we get into like how can a random stock chart do that? How does it find the same exact point repeatedly? And that is actually why I entered where I did. Now, again, just because something has happened doesn't mean it's guaranteed to happen again. It just so happened to be pretty predictive still. We were a little ways off here, but not super far off. And since then, we have rebounded. So that's kind of interesting. And then there's another line here where I've got a potential resistance line, and that is because we have a gap in the chart. And a gap is what happens when a stock drops generally off of some big news, some catalyst, and it can be a gap up or a gap down. But when this happens, stocks, quote unquote, like to fill the gap. They can grab liquidity in those events. They can wipe out stop losses. There's a whole host of reasons for that. That we're not going to get into here, but you just need to know that it is common for a stock to want to fill the gap. Now, we have other gaps that don't necessarily need to be filled. I'm going to show you a gap on NBIS or Nebius, where there's a gap here where they announced that Microsoft was now a huge customer and had secured $5 billion in revenue of a contract. And so we generally have stayed above this. Now we've backfilled it a little bit, but not all the way. Another recent example would be Meta, which had a gap on the daily down to 600. And we did fill that gap. In fact, we went below it. And now there's a gap up here, right, where we will likely fill at some point. You can draw these. It's nice to use the drawing tools to indicate this so you can quickly see it when you go back to look and say like, hey, we're not far from this gap. And it's also common where you might have a gap that where that gap started could be an area of resistance or support depending on the direction. And again, there's a gap down here, doesn't mean we'll ever fill it. It just means that there's a potential that if things are heading in that direction, it might fill. My biggest example of a gap fill ever, though, is Reddit, where you got to look at all my drawings here, sorry. We had a big gap way back in the beginning of time for Reddit, not too long after IPO, where people started to realize, like, oh, this company might go somewhere. And they announced amazing earnings. They blew away expectations, 300% surprise. And what did we see? A giant jump from 82 to 104, and then just a monster climb. And then there was this, as I've got it listed here, a nonsense drop that was, after more good earnings, we just kept dropping. That also coincided with the April tariff announcements. And we filled that gap to the dollar. Look at that. Look how close that bar went. And this is where you go like, oh, wow, I think TA kind of works. These patterns make some sense. And you'll see that as well, where we like to not only fill gaps and test support lines and resistance lines, but we also have a tendency to test EMAs and SMAs. You can see that we tested this 50 SMA to the dollar. We tested this 100 SMA to the dollar and bounced back, right? All these things. Currently, Reddit has this, as you can see, my basketball emojis. They have a resistance line. It's been an area of support in the past where we've bounced off positively, and eventually we broke through via a gap, again, a gap, and this was based off of news around AI not citing Reddit as much as previously thought. And then we had news that, oh, actually, no, they fixed it. It's being used all the time again. But lo and behold, we twice now have bounced off of this line, this same line, on the upside. Why is that? It's just a recurring pattern that we can use to make decisions. And in this case, I did use this to make decisions. I sold basically right above this made-up line that I made up, a 230 call, covered call for Reddit. I use this as a way to time an entry. And you can see my line is just slightly above the blue line. And in fact, maybe the blue line should be moved up slightly, whatever. This is all, you can think of these really as ranges. So maybe rather than a line, you should think of this in terms of a zone. And you'll find that when you read The Tao of Trading by Simon Rhee. He will call it a zone instead of a line. But I just like to use lines because they're clear. We bounced right off it. And, for a moment, maybe I was sweating, maybe other people were sweating, only for things to bounce off and reverse. Now, I don't think it means anything bad. I think we've made a new high, new low, making a new high, maybe we'll make a new low, and then maybe we'll bust through this. Who knows? I also have a short-term trend line that shows me the risk that I see of, yes, this could go through, but I really thought that before that, it's going to test this line, and it did. Now we can go one step further here and use another tool known as the Fibonacci's. And there's an auto fib extension that does this for you automatically. You can actually draw these manually. It's not that hard to do so. Bob Dog asking about class. It's still going, Bob Dog. Don't send me any more messages, please. Sorry. Question, can I explain how I'm drawing the support and resistance lines? Yes, okay. We'll do that before I get into the fibs. That's a great question. Let's hide the fib. To show you, I'm going to use Archer, where I have a resistance line and a support line, actually. So at a glance, looking at this screen, if I turn everything off, can you, the viewer, find a resistance line? Where would you draw it looking at this? And I'll give everybody a second. I know you already saw the answer. That's okay. But just look at it fresh. Now, this is looking over the course of basically year to date. Where would you put a resistance line? Now, I think, obviously you already saw it, but it's pretty clear. We touched basically the same point 3 times in a row. So this is a clear example of resistance. Unquestionable, if you ask me. How is it that over a 7 or 8 month period, whatever this is, we continue to bounce off the same exact line? And yes, the wicks might go past, We don't care too much about the wick. Sometimes the wick will touch exactly, sometimes the wick will go through it, but the close is what we care about. And just in case, real quick, I'll answer a question that was asked in the original course that we offered. There is a difference in what you're looking at between a green candle and a red candle, as I'm sure you know. But in case you're wondering how these candles are made, it's real simple. A green candle happens when there's a price where you open and you are above that price. You close above that price. Now, in this exact candle that I'm highlighting over here, the day started at this line of 12:38 or so, and at some point during the day, it was a red candle. And this bottom of the wick shows how low the stock dropped during the day. And then we ended up here. And in fact, there's no wick at the top that I can really notice. So we ended at a high. The next day, you can see that we tried to go up to this resistance line, and we bounced off it. So we opened at 1308, we touched 1375, and we finished the day at 1330. That's a green candle. Now, what's cool is you can have red candles that are above green candles, like you see here, and you can have green candles that are below red. It does not matter if it is above or below the previous bar. All that matters is what happens within that day or whatever the period is that you're looking at. 3 minute, 2 hour, day, weekly, monthly, they all work the same way. A red one, though, is where you open at a price and you finish below it. It's that simple. Green is started at a price, finished above it. Red is started at a price, finished below it. That's it. So always keep that in mind when you're looking at this and you're wondering, what a particular candle means. So anyway, that is in a nutshell how I draw a resistance or support line. You can see I did it in the past here as well, looking at support lines for Archer where we seem to bounce off the same point. Now again, in April, I ignore this because this was related to tariff mania. So if you ignore this Black Swan event, we touched the same point. And guess what? We just did it again. We just did it again. We hit that same exact point. How is that possible? Because TA is apparently a thing. And you're going to start looking at this and seeing these patterns when you look at it. Hopefully that answers your question, H me in. I hope it does. If not, feel free to ask for further clarification. Okay. I forget where we were going. Fibs. We were going to talk about the fibs next. In the fibs, I will hide my drawings and instead show the fibs, which is an indicator here. You can add this, again, you can add this indicator, find the how to add indicators video, and it'll show you how to go through all of that. Now, you can draw these yourselves. I would suggest if you're interested in figuring out how to do that, Google it. There's probably a million videos on how to draw fibs. But we're just going to use the auto fib for the purpose of this video. And then I'm going to look at, again, Reddit, because I love Reddit and I'm actually interested. Where are we at right now? And we are at an interesting point. Now, if you remember, just a moment ago, I showed that we were bouncing off this resistance line, and that is relevant. But the other thing that is relevant is we're in this Fibonacci sequence. Now, the fibs are a mathematical phenomena where you have a natural, progression of numbers, where you can see there's clearly a pattern. I believe it's the same ratio that is found in nature with like helix shells and certain plants and things like that. And it, believe it or not, seems to happen in human patterns as well in the stock market. And it's fascinating because we will often test off of fibs to the dollar, and very often we'll try to break through a fib only to retrace to below it. Now, again, this is a great time to, if you haven't already, buy the book, Simon Rees, The Tao of Trading. He has a really nice metaphor for how this all works in visualizing it. He likes to use, imagine cows grazing on a field, and the fibs, these lines, are fences. And as you can imagine, it takes momentum to break down a fence. And it takes a lot of momentum to break down multiple fences like this. And sometimes, oftentimes, when you break, before you break a fence, you test it. And you can see here, right? Like we tested above this fib a couple of times and we keep ending up in it. But eventually, we found enough momentum and force to break through that fence and into this new field to graze in, to use the Simon Rhee metaphor. Now, we will probably graze in here for quite a while before eventually, hopefully, breaking through. And there are some fibs that are more important than others. The most important ones are going to be the 618 fib, which is like a big fib off of the 1.0, and you'll see it in reverse as well, the 0.618 below it. Those are major fib lines. So breaking through this lower one was a big deal, and this will probably be a large level of resistance. And I don't have a line here, but I can tell you, I just drew a line. I have 245 covered calls. In case we were to break through this resistance line, I don't think in the same week we would also break through this resistance line, this Fibonacci fence. And again, you can use that as a way to choose your entry points for selling an option. Now, when we get into the details of the option chain and things like this will make a little bit more sense why did I pick 245? Well, the fib is 242, so 240 would be below that. And there's a 240, 250, maybe, I'm not actually sure there is. The volume's low, so I got the next best, quote unquote, best option with volume, which is 245. TMI right this second, but just to fully explain for anyone who's watching and does know what I'm talking about, why you don't pick the exact line for selling an option. You've got to pick one that also makes sense relative to the option chain. But you can start seeing in different charts by using this how we tend to bounce around in the fibs. And here's one for Nebius. You're typically, based on the way that you draw the fib, this is a natural touch point in setting it up. But you'll see that we may test fibs exactly. What's interesting is you can see this on stocks that have 2x ETFs. It often works on the 2x ETFs as well. I'm realizing by sharing this, I'm probably confusing people. So let's just delete that, pretend that didn't happen. Unfortunately, this is live, so I can't edit that out. But yeah, there are fibs that work across both a stock and ETFs. Now, even ETFs like SPY has fibs, right? And you'll see that we magically test fibs in SPY. Pretty amazing. It's also true that we test exactly to EMAs and SMAs on ETFs like SPY. Also seems magical that happens. And it happens on both weeklies and monthlies. You can see that the fibs, if you change to a monthly, fibs work on the monthly as well. All of these indicators work on any time period you want to look at. And that's very important to look at. And you'll see that there are times where we test the fib to the dollar. Again, we don't always. These are just potentials that you might consider, especially when trying to choose an entry or an exit for a stock. Okay, I'm going to take a breath again. Any questions? We went through a whole lot there again. Hey, Chewbacca, joined late. What's the app we're using for charts? That is TradingView. You can use TradingView or Yahoo Finance or Google Fi, whatever you want, right, to look at charts. And apparently I lost the summary for Yahoo. That's fine. Here's the chart for Yahoo. It's totally up to you. I do recommend TradingView. I think it is the best tool out there. Likely your brokerage also has one. Fidelity, I know, has one. Thinkorswim's going to have them, right? Everybody has them. But I really like the ability to add scripts easily to TradingView. And if you're interested in TradingView and you're interested in buying it, plug it again. Please use our TradingView affiliate link for the YouTubers. That'll be in the video below. And for those of you on the Discord, it is in the weekly updates channel. Will there be a recording? Yes, this is going to YouTube for Gunner. You'll see it. Lee, what's the fascination on traders trading options on SPY? Is there an answer for that? Well, Lee, there is The biggest thing for SPY, and this isn't super relevant to selling options, but I'll just answer briefly. SPY is going to have incredibly high liquidity and volume, which means that you can get like exact pricing and almost always get a fill at an exact price. You can use market orders on SPY fearlessly as compared to, a lesser trade stock. If we look at the volume on SPY, this candle is 588 million. This one's 354 million. This one is 457 million. You see that up here where it says vol. This one, this one is almost a billion, or yeah, that's insane, almost a billion. Whereas if you were to look at something like Archer, you got candles that are 100 million or 80 million, and it keeps going down depending on the size of the company you're looking at. Looking at AIP, which again, I'm not suggesting any of these companies are good or bad, but look, 1 million. And this is important because the speed at which options fill changes based on the market participation. We're going to get into that in the option trading, in the actual option chain video that we make next. So you can take a look at that for that. All right, let's see. Do we have anything else that we wanted to cover for TA? We already talked about gaps. And I think the only other thing to note is this note down here, which is keep in mind if you are setting limit buys, limit sells, whether that's for stock shares or for selling an option, market makers can see that, right? So sometimes it's fine to have limit orders. There's nothing wrong with that. It's just good to know that the companies out there, the powers that be, can see that. And so that is a reason why a lot of this stuff even works, right? That's why when you look at a stock like Bull, as an example, which is currently trading at a low, there's a lot of people, I'm sure, with buy orders at $8 right now. And we can actually see that if we look at the VRVP number of orders that are out there, right? Let me zoom this in a little bit. You can see, where orders are sitting and placed, and market makers can use this information for whatever movement that they're expecting, whatever trades and plays that they're looking to make. It's a little advanced for what we're looking at here, so we're not going to go into that. Another common indicator we like to use is the Super Ichi cloud. There's a lot of videos that you can look into here. Kind of interesting for Bull. Basically what we're looking for is, in this case, entering the cloud, which will happen almost not quite guaranteed, but very likely by Christmas. We should see ourselves in the cloud here, and that can be a bullish pattern, right? And then we've got other things like Bodog has made his own script for the Theta Daddies. He calls it the bark and bite, when you might want to consider getting out, when you might want to consider getting in. Bullish signals, I believe, are the yellow candles, bearish ones being the red ones. It's a homemade indicator that combines a bunch of other indicators. And you'll see there's a million indicators out there. You can do moon phases. And people, believe it or not, trade off of the moon phases. I'm not going to suggest you do it, but you could. So you just need to find what works for you. Can I explain Fibonacci again on a fresh chart? Sure. We can look at Hood, which has a Fibonacci laid out where if we turn it off, you can just look at the chart here. And Fibonacci automatically loads. You'll see it doesn't go back in time forever. It goes to specific points, a specific low, a specific high, and then fills it out from there. Because again, this is just a ratio that is being laid out across a stock chart. And once again, what we're looking for is support lines and resistance lines. Now, the Fibonacci in this case is kind of interesting because we start at the drop. So Fibonacci's can go up or down depending on the recent stock movement. In this case, it defaulted to down. And in this scenario, we saw Hood drop all the way down into this zone here, which is right above, as we were talking about. You can see here the fib is 1.618. That is a quote-unquote key Fibonacci line. Now, we didn't test it, but we did bounce back while within this zone, which is not surprising when you look at it. Now, it was likely to turn around somewhere here or test off the bottom or potentially even test off the 200 SMA, because this is a long moving average that many companies and people look for. And that's why TA works, because we're all looking at the same patterns, things like that. So on this chart, it was one of those situations where we didn't know it would turn here, but you could predict support at 97, and you could predict even more support somewhere in this range of, like, call it 90. By the time you would get down to the 200 SMA, it would probably be about 90 because it would keep coming up, right? And so we're just using that as another data point. However, for Hood, I like this line, this zone here, which is another way to combine all of these indicators with just a real simple support zone. And the reason this exists is because if you look in the recent history, there was strong support in the past right at about $100 for an individual share. And yes, we went slightly below it once, and the wicks went below it, but we were in this range. This seemed to be a real good support range. So it is kind of interesting that we were in the major fib, and we didn't retest off it, but we turned in it in the zone that we have turned around in before, above major support levels of this fib and a 200 SMA. So all those things combined did tell me personally, I was planning on buying Robin here, and I missed out because my cash wasn't settled. But Robin being the 2X, by the way, so let's just say Hood. I was intending on buying Hood here, and frankly, I unfortunately missed out. But it was very clear to me, and probably others, that we might see a reversal here. And it was V-shaped for one. It was a very quick reversal. So using all of these indicators combined, you can make educated guesses of picking a good entry or exit. So hopefully that helped just better illustrate how we use not just the Fibonacci's, but all of this stuff combined. Now, I don't think more is more. You can look at other indicators. You could add 50 on here if you want and draw lines all over it. At the end of the day, you're going to find the things that speak to you, and sometimes you'll see something, and sometimes you don't. You can also combine these with different patterns. Things like, I like to show this one on the weekly for Google. This to me was a fun one where there was a very clear bull flag that formed on the weekly. And we tested off the 80 MA, and then from there we rocketed up, right? So this was kind of cool. You can combine your indicators with known patterns. In the case of Reddit has my what I like to call famous cup. We'll go to the daily for this one. You can combine indicators with, where's my cup? Oh no, the cup disappeared. What did I do? Did I delete it? I hope not. I must have deleted it accidentally. Well, that's fine. We can undelete it maybe. Maybe. There it is. If I go to the daily, is it still there? There it is. Okay, sorry about that. I don't know what happened there. So sometimes there are things like cup and handles, right? And these can combine with indicators like the momentum indicator. You can look at volume and see the profile changing on the volume. And all of these things combined give you a feel for, yep, this is a good point to enter, or good enough, or I have no idea, and maybe I'm not going to touch it for a while, right? So that's how these charts get all crowded looking and stuff when you start combining these things. And that's where you get the most benefit as well, when you put a few of these in layers and can start putting a story together that makes sense with the stock's performance and the fundamentals that you already know. So hopefully that gives you, I'm sure that both clarifies a little bit, but probably also muddies things a little bit. And that is to show you the mountain. We're at base camp right now, right? We just learned the basics of EMAs, SMAs, the fibs, drawing lines. This is base camp. The mountain goes forever. I'm not sure there's a top to the mountain. There are things like Elliott waves that Bodog likes to use. There are things that, there's all sorts of things, right? Like you can make your own indicators like the bark and bite that he did. You're going to find the things that speak to you. And then from there, we're going to transition into the next course. And that'll be next week on Monday, December, what day is that? December 8th. We'll be talking about the option chain and placing our first trade, which means specifically selling an option. Very exciting. And we're going to show you exactly how you use this information. You pair that with the option chain and you find an entry or exit that you like for a stock. Now, a covered call would be essentially an exit, and a cash secured put would be an entry. And using those two things, depending on if you're already holding shares or not, or if you want to get in, you'll place a different trade. And of course, that's going to be all topics that we talk about next week. So with that, that covers today's bootcamp course of fundamental analysis and introduction, I would say, to technical analysis, because as I mentioned, it basically goes forever. And you'll just continue to get better and better at it over time. I found personally, the way I learned this was I added one indicator at a time. I started with just the EMAs and the fibs. And then from there, I added the Super Ichi cloud. And then from there, I looked at VRVP. And then I got RSI and the squeeze mom indicator, which shows momentum. All this stuff is what I like to look at. And I'm sure every trader, I would bet, has a slightly different setup. So with that, I'm going to open it up one more time for any questions that I can answer. And then we're going to wrap up. We've been going for just about 90 minutes here. So this has been a very, very productive class in covering quite a bit of ground. Yoso, I'm not sure I can say your name. Oh, wait, maybe I can. Yosoy Elchina. Did I say it right? Thank you for watching. Hopefully you enjoyed it. Look forward definitely to next week. Close enough. Is it Spanish or Hispanic? Maybe or Portuguese? Did I get close enough in that? Sí. Awesome. Perfect. I only know bad words in Spanish. That's the problem. I'm not going to say that on this video. That's for sure. You'll have to come to one of my weekend reviews for that, which is Friday. Every Friday. You got it, Chewbacca. Any other questions or comments? Give everyone just a moment. We do have another 5 minutes left for what I had planned today, so happy to hang around for a little bit if you do. I've effectively lost my voice for the day, so hopefully it was worth it. Oh, I do have one more thing. I'm sorry, I do have one more thing. I'm also going to share a homework worksheet that you can use. Now, it's set up in our old format of 6 weeks when we did this initially, but you can use that as just a guide for going through fundamental and technical analysis on your favorite stocks. You don't have to do it, totally up to you, totally voluntary, but I do think it's helpful and a useful worksheet to get you started and give you a little bit of guidance on the first things that you might want to look at. So I will share that after this class as well. Lee is ready to make $1 million by next week. Awesome. Hopefully you're not starting with 100 million. And outside of that, that is everything that I have for you today. Average Advisor, I think, had to jump off, so no closing words from him today. That's okay. I think he'll be on all of the calls in the future. Next call will also have Bodog with me, so that'll be exciting. Chewbacca, that will be in the, I can show you, I will bring up the Discord here for a moment. That will be in the class announcements or class discussion. Here you can see the original option selling course links, and then the class discussion here will be where you can all talk about anything that you're looking at from the class that you've taken. And you can see all the prior class chatter, which there was a lot of action, which is exciting. Feel free to use this for a channel relevant to everything we're doing here. There's also a homework discussion channel. It doesn't matter what channel you use. Talk wherever you want to talk. We'll figure it out and make sure your questions get answered. And that is, yeah, hopefully that covers it for you. I've lost my, there we go. I lost my screen here. You remember seeing a calculator for determining returns. I have one built into my tracker file if you want that. And you can find it in the tracker files channel. And it's on the third or fourth tab there. It just says ROI calc or ROC calc. But we can do those. We can also do those by hand pretty easily. We'll probably do some live examples of that next week in the next topic of picking an option, because that is going to be key for deciding what option to sell, right? If it has a ROI of 0.01%, not super good. If it has an ROI of 10%, well, you might be picking the most volatile stock of all time, and you also should question that. So we'll cover that next week. Okay, well, with that, I'm going to wrap up the video. Let me end by stopping the recording and just saying once again, thank you for listening. For those of you who are watching on YouTube, feel free to either join the Discord or you can ask questions and leave comments in the chat, and I will try to get to those as quickly as possible. I will tell you that can take a little bit of extra time for me to do that, but happy to answer questions as they come up and help however I can. Hopefully you enjoyed. We'll see you on Monday.